Good morning, everybody. It's Chris here from Serene Education with the 4 majors notes update for the 11th of October 2012. Hi guys. Okay, 4 majors. Daily Euro in front, and you can see the price action yesterday finding a bit of consolidation above this 200 period moving average here on our daily. You can see quite clearly 1, 2, 3, 4 consecutive bounces here not so long ago in the latter part of September, and you can see yesterday's trading into this support and then bouncing. However, still indecisive, bit of wick on each side, and on the Asian session last night, very indecisive. Okay, so if momentum on the hour is generally to still remain positive, then we do need to see a bullish engulfing candle. We do need to see some sort of support, a bullish support here. Otherwise, what we could end up seeing is potentially price breaking to the downside. Why? Because if you look at the last swing, okay, yeah, the last high is a lot lower than the previous one. Okay, those highs here back in the 1500. The last bounce over here, a lot smaller, a lot less higher than the prior one. So telling us definitely there is some sort of some definite consolidation now. However, you can see the CTC still remains positive. Okay, it's still telling us that sentiment is still looking genuine to the upside, and you can see our intermediate trend near term is still positive. We're still seeing swing high, swing high, swing high, swing high, swing high. The only we're not seeing swing highs here is the fact that we're actually seeing price making further swings to the side as price consolidates above the institution moving average on our daily, which is roughly around about the 1283, 128400 mark. So price needs to stay above here in order to see price continue to the upside or reattempt the 1300, which will bring us back towards a squeeze pattern of here. So patience is a virtue. We do need to see a bullish engulfing candle here, support, confirming support before we see a push up near side. However, the other outcome would be price consolidating here and breaking and closing lower. If we get a closed lower than 12800, then we should be looking for sentiment to start looking negative long term, and we should be targeting our fib retracement levels to the downside, i.e. 38.2 here at the 1275, the 50% at 1260, and ultimately down at 61.8 here at the 1250 mark would be our targets long term. So as it stands at the moment now, price is trading into a support. So if you're looking for any trades in today, I'd be very wise just to back off and look for price to actually do one or two things. Find support here on a 4-hour candle to see if we can actually get some momentum to the upside towards the 1290. As you can see yesterday, price traded into the 1290, or look for a break of the 1284 before we see price moving to the downside. Next up is sterling. Let's have a look and see what's happening on the daily on this particular pair. Yesterday, very indecisive. The past 2 days in particular, after negativity last week, very indecisive. We had a spin top doji yesterday. So both of these candles have here depict indecision on the market, and ultimately the market is looking negative. We have seen price moving lower. This only constitutes because we've seen price actually moving away from a major resistance level that we see here at 16,300. So how far is this price likely to move? Well, as you can see quite clearly now, if I take the low here in June to the current high that we saw in September at the resistance level here at 16,300, you can see the fib retracement area at 23.6, 38 to 50, and the 61.8 down. You can see that 23.6 just near term at below the 605 has been broken. A nice bearish engulfing candle taking us below that. However, since then you can see price has been trading at the underside, and it looks as though the next potential target would be our 38.2 here below us, or back towards the 50 period moving average, just above the 159500 mark to start with. So as it consolidates on this, you would like to see the histogram going red eventually. You can still see that the sentiment on this particular pair is still looking positive because the histogram on the other side is still remaining blue, even though we've had a major pullback over the past couple of weeks. So where to for this one? Well, ultimately, as long as it remains below 1605, then we should see price consolidating with ultimately the downside back here towards the 38.2 being our first target at 15,900. Break below that would take us to the 50 period and back towards the institution moving average here in the shape of the 15,800. So consolidation, we want to see some sort of movement from the market. We don't trade indecision. You can see we would like to see a decisive candle. Yesterday, very indecisive. So one or two things could happen. We've had a breakout just recently. We could see a consolidation before we see a move to the downside. So if we start seeing indecision on a bearish move, then we could potentially see price consolidating, and as long as that consolidation still fails to break above 1605, then we could ultimately see what we could revert to as a breakout, the pullback, a failed pullback, and then a continuation in the direction of the breakout, the initial breakout. So breakout, pullback, continuation towards the 38.2. I'm just looking at my 4-hour chart. You can quite clearly see that my RSI relative strength over here is falling with price. That's great. And 16,300 above us, you can quite noticeably see that major resistance level. The institution moving average near term has been broken, which is a very, very important suggestion that price is looking negative. And you can see over the last couple of days or so, you can see price is now failing at the prior breakout range over here at roughly the 1603 mark. So, and the 20-period moving average come to play. So a lot of consolidation over the past number of hours, the past couple of days, and we'd like to see one or two things. We'd like to see price now moving away from this to the downside, so a nice bearish engulfing candle taking us lower out of this consolidated range here, and then still remaining below all the moving averages. Notice our histogram on either side is still negative. We have seen consolidation here as the RSI has failed to make any lower lows, and price, as you can quite clearly see, has just gone sideways because of that. So now we want to see one or two things. We either want to see price falling lower, because you can see the sentiment is still looking negative. Okay, the CTC still remains negative on either side, and as long as that remains, then we should see price potentially looking for a break to the downside. So we want to be trading with market sentiment, and because negativity over the past couple of days has been negative because of that major resistance above at 16,300, then ultimately we should see price looking for a break to the downside. The other scenario would be price ranging over here to continue to range, and the only thing that's really going to change market sentiment is obviously a bullish engulfing candle. Ideally, we'd like to see it trading above the breakout area here at 1610 to see any potential or break and close above the institution, and particularly above the institution. That would definitely tell us that this was just a consolidation as we see long-term price heading back towards the 16,300. So if you can see, just recently a lot of buying sentiment to the upside, and now this has just been profit taking, and then we should see a price reverting to the upside. So it's imperative that what we want to see now, if this is genuine, still negative, then we want to see a bearish engulfing candle below 1595, or if this is bullish or just the end of a profit taking range, then we want to see a bullish engulfing candle above the institution moving average to see price moving to the upside. So in a scenario like this, what I tend to do is go to my 4-hour, go to markets, and what I'll do is I'll put a trigger alert below 1595 and a trigger alert above 1610. Yes, you can make money to the upside intraday. If you wanted to, you could look for an hourly close above this consolidation range over here to trade to the upside back towards the institution moving average as an aggressive against the trend trade, or if you wanted to just remain patient and look for the break to the downside. On to the US dollar Swiss franc. Let's have a look and see what's been happening on this particular pair. You'll notice that price up until recently in July traded straight into a major support and resistance level here in the shape of the 1000, and since then price has been reverting to the downside. You can see up until a certain point the actual histogram was telling us that positive sentiment was still governing this pair, but as we didn't fail to see price reattempting these highs, the sentiment started to change from one of very bullish setup to one of a bearish consolidation, and we've seen price reverting to the downside. Near term, you'll notice that price has actually broken through the institution moving average on our daily, and this has happened for the first time since October of last year. So it's very, very important that this is telling us that sentiment near term is looking negative, and you can see quite clearly price actually failed to break above the institution through the latter part of September. And we are seeing price reattempting these highs again near term. Yesterday in particular, we saw a lot of bullish buying sentiment 2 days ago into this resistance area, and then yesterday we saw a spinning top. So spinning top, indecisive candle, and that coming at a prior resistance level, and quite a noticeable resistance level here in the shape of this is the Fib 23.6 retracement. So price, if this is going to be a definite consolidation support area, then we want to see bullish engulfing candle here to confirm that, and then we should be targeting these Fib retracements to the upside. However, if we do see this as a noticeable resistance as we've seen before, then we need to see a bearish engulfing candle, which would dictate to us that price is looking now resistance level above us, and we should be targeting the 930, which happens to be 2 prior attempts to the downside. So very, very important, guys. Those of you looking to trade this, rather wait and bide your time for a decisive candle. It's very, very important. The last thing you want to do is be stuck in trades going nowhere. And if you look at this particular one, if I look at the 4-hour entry here, you can quite clearly see that the institution moving average now on our 4-hour is clearly in play. Okay. Look at the CTC histograms on either side. You have very mixed signals. Okay, we don't want to trade mixed signals. This is the beauty of this particular template, is you can see that mixed signals coming out on the chart, and once you see that, then it tells you straight away, listen here, I'm not going to trade this, rather give it to the market, rather put your alerts on either side of this. You want to be trading on either side of it, ideally to the downside, because price is still moving to the downside. The other scenario would be if price continues to range and it keeps finding support here at 930 in particular, you're eventually going to start seeing price finding reasons to actually to buy into further sentiment to the upside. And you can see that the RSI is spending a bit more time now above the 50% line near term. So what we want to see is a bullish engulfing candle close high here, and then that would give us the indication we should be targeting 952, price support here and resistance to 960, 970, and back to the upside. Last pair of the day is US dollar Japanese yen. And I mentioned yesterday, you can see the indecision yesterday, this bearish engulfing candle recently has seen price want to move to the downside, and sure enough, hopefully you guys would have taken the trade and you would have been in profit. 78 is now back in the market. You can see quite clearly 78 here, this dark line has been price support and resistance level of this pair for a number of months now. And you can see that the histogram on either side remains red. One or two areas are blue, however, you'll be trading the actual confirmation signals that you're looking on your candles to confirm that sentiment wasn't behind the actual blue indicator, and therefore the signal would have been null and void. Okay, this is the beauty of the histogram, guys. You still got to back it up with sound money management. You still got to back it up with decent. You still got to be able to clearly see if there's any genuine sentiment in a move, and that's where candlestick reading comes into play. It just adds a hell of a lot more oomph to your trading, and I do suggest anybody out there who's looking to trade anything, including shares, rather get in tune with candlesticks. Candlesticks have helped me a hell of a lot in my trading over the years, and it just adds so much more conviction to price action. So near term, price trading into the support over here. Okay, you can see quite clearly over a number of months, price has actually found support. We had one or two areas where we've seen a break, and we wanted to see a clear break of that. So in this case over here, if sentiment is still looking negative, then we do need to see price and closing lower than 78. Once we get that, then we can actually look for price to continue to the downside. Okay, we can trade near term towards a 70 and 70. Otherwise, what could happen is we could see price now consolidating at this area before we see another reattempt to the. One thing to be aware of is the fact that these highs are getting lower, and the institution moving average, most importantly on our daily, is still above price. All these are stacking up as negativity for price. The sterling, the US dollar is finding a bit of negativity against the US dollar near term. It has been consolidating, however, at 78. It's imperative that price actually breaks close lower than that to confirm that price long term is looking really negative, and we should see price closing below this area here, this support and resistance area in the shape of the 78.6 mark, before we see price reverting all the way down to our ultimate target would be 7600 below us. So intraday, look for price to see if there's any change in market sentiment. Here you can see quite clearly on the 4-hour chart, price trading into the 78 here. Okay, you can see that the candles now, there's a lot of wick at the bottom, so you'll notice that price has been trading through the 78. However, price is now still maintaining above the 78. There's still more price action above. Yes, it's traded below it, but you can see that price action, the actual body is still trading above the 78. If this happens, we start seeing hammer formations. Notice, however, the RSI has not actually moved away. So as price has been trading to 78, the RSI has not been climbing, so it's telling us that sentiment looks, particularly in the VR for the near term, looks still genuinely negative. Okay, all I'm moving up to above price. You can see that just recently, if you take the intermediate trend, you can see that we're seeing lower swings, which depicts downside. CTC is starting to go red across the board, and as long as the RSI remains below 50, and once we can get a nice 4-hour close, candle close lower than 78, then it would generally tell us we should be targeting near term the 77.70 for this particular pair. My hourly candle entry, you can quite clearly see that from the highs, lower swings, moving averages, all above price. Histogram, you can see just recently we've had almost a changing the guide. We had a bit of bullish movement here, and the histogram confirmed that. Then all of a sudden we started seeing more red. Okay, there's less blue and there's more red. And you can see that this starts becoming more genuine because the institution moving average has been broken. All our moving average above price, and it's telling you way back here that sentiment was waning or waning to the downside. And look at the RSI, spending more time below 50% than above 50%. See, upside trend, histogram, everything. Notice the RSI above. Okay, but as we went and made higher highs just over here, you can see that the RSI started to weigh, telling us that sentiment was looking really negative. We should start seeing pullbacks in the market, and sure enough, we started to see that. Near term, it's trading below the institution moving average, and the only thing that's in the way now is the 78. Get a bearish engulfing candle but close below this area here, and then we should be targeting the areas below here at 77.70. That's it for today, guys. 4 majors explained in a bit of detail. I hope they help you. Please back it up with sound management, guys. If you are using this template, follow the rules of this template if you are using it. It's imperative that you actually follow the rules. Otherwise, it'll just end up being an absolute nightmare. So make sure if you are using this template to please follow the guidelines and back it up with sound money management. Otherwise, look at your fundamental news to see if there's anything important today. G7 meetings comes straight out. That's an all-day event. We have later on we have the FOMC member speaking, and then we have ECB, the monthly bulletin for 9 a.m. GMT this morning. Then we go into this afternoon. We have the trade balance figures and unemployment claim figures for the US market at 1:30 GMT this afternoon. Before we have the crude oil inventories later this afternoon at 4 p.m. So there's a bit of news out there. G7 in particular, that's going to be one that everyone's going to be looking at. But trade balance and unemployment claims for the US market is also quite a strong one. It'll be interesting to see how those are going. They're expecting slightly higher unemployment claims. So if that comes out higher than the forecast, then it could be quite negative for the US market. If it comes out lower, then you could see the US market potentially rallying against most of its cross pairs. Otherwise, that's it for today. Hope you have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.